Good afternoon, everyone. Good afternoon. Oh, is it because there was no coffee there? Oh, wake up. Okay. Now, our session, scaling merchant payments. What does it take to succeed? Good question. Start from a simple truth. Instant plays alone don't guarantee everyday usage. We've seen it. To win at the point of sale, especially for micro and small merchants, we need a whole stack working together. Some would say interoperable QR standard, so that there's no sticker works everywhere in the shop, or low friction, low cost onboarding, so a merchant can go live in a minute. Shared registries, and so on. Today, this evening, we have a chance to have two leaders who've been doing the hard work. Hina Hamid.
Hi, everyone.
And Jean-Jacques Kajuga. Hina, before we dive in, for those new to Rust, we saw it in the morning, but one or two people were not around. What is the simplest way to understand Rust role in Pakistan, IIPS?
So, RAS is an IPS instant payment system, but what we at Central Bank like to introduce it, we introduce it as a platform. We use it for bulk payments, which are majorly the government-to-person disbursements. Then there's a part where we facilitate fund transfers, person-to-person transfers. We have time-bound it. Within 17 seconds, the transaction happens, or at least the sender gets to know if the transaction happened or not. Then there's a P2M layer, person-to-merchant layer. In that layer, we facilitate the merchants to have their own interoperable QR codes. A static one, which a small merchant could just display at their counter, at their shop, at their roadside stall. For a bigger merchants, we do have this facility of generating dynamic QR codes with all of the information related to invoice embedded in it. We have request to pay available for a shorter duration of time, for a longer duration of time for bill payments and invoices. So that is all bundled up in Rust. We try to think it as a system beyond just instant payments, a system which basically connects different market segments in Pakistan, including government, including the NBFIs, the financial institutions, and any other entity which basically whose core business is not payments, but their business really relies on reliable payments and information exchange. So that is how we like to define Rust.
Thank you so much. Jean-Jacques, I'll be calling you JJ as I used to.
Please do.
Could you give us a 60-second picture of eCash raise and the R-Switch role as an introduction?
Thanks, Olivier, and good afternoon, everyone. Glad to be having this conversation with you. What Olivier called as eCash is our national instant payment system, the mobile interoperability. For context, I work for R-Switch, which is the entity that is mandated to implement the national interoperability project. We came in a context where there were already existing rails. That's why I usually say interoperability is usually country-specific. In Rwanda, there are already some interconnection previously between institutions. Banks were able to send interbank through the RTGS RIPS, which actually was even subsidized by central bank. But again, financial institutions were charging. Somehow that subsidy is more benefiting financial institutions than the consumers, because they're being heavily charged an average of $1 per transactions. Second, their bilateral rails with the boom of mobile payment, mobile money were integrated with banks bilaterally. So when we came to our topic, mobile merchant was specifically done by only mobile money. Banks were into merchant, but riding on the card rails, which made merchant payment on a card side very expensive and somehow only left to very expensive or travelers, people use card, considered as a prestigious product. So mobile money were the one somehow exclusively handling the side of mobile merchant payment. So R-Switch, we came to bring now interoperability because mobile merchant was doing in a closed loop. And that's how all these institutions are trying to ride on the switch to achieve interoperability and now venture into the merchant payment product. And this is now the hard agenda that we're trying to drive and bring in P2B interoperability between institutions and open opportunity for those wanted to venture into the SME business from a merchant payment. So I think I'll pause there and give more details later. Thank you.
Yeah. Hina, which regulatory scheme, regulatory and scheme rules choice made the difference when running Rust into everyday person-to-merchant rails?
We do have certain different set of regulations which basically govern the whole RAS P2M scheme.
Okay.
Earlier the discussions were happening around the rule book. So the rule book is there for RAS P2M specifically. However, it's a bit dispersed in the form of different circulars intended for different participants and also different implementation and business processes. So that is how we are dealing with it. In terms of disputes and cashbacks, probably you may be interested in that more. We do have a framework available with our participants available. It's automated through the APIs and dispute management platforms which are available to our participants, which we like to call the MSPs, merchant service providers.
Okay.
So yeah, that is pretty much it on the scheme rules part.
Yeah.
Basically, Rast Payments Pakistan is still a very younger organization. It is just split from the central bank.
Okay.
Okay. So a lot of mandates, a lot of instructions to generally the market, to the participants, and even to us comes directly from the central bank. So it's more of the regulations rather than the scheme's own rule book. So that is how we are working in this space as of now.
Yeah. What turned out to be unexpected bottleneck to merchant uptake, if you had any?
So it's interesting. We do have a regulation which is called a digital merchant onboarding. It is for very small merchant. It does have a cap that a merchant can do up to this PKR business, and they could onboard themselves digitally without anyone's help. So they download any of the merchant service providers app, they provide their basic information, their national identity card number, do a live face check, do a biometric through their phone camera, and they're just good to go. A merchant account is opened, and they could start receiving payments. Through the same platform, their RAS QR code is also generated, which they could show to the customer whenever a customer wants to pay, or they just can take the print out and display it somewhere. So this is the very basic. Merchant can kickstart digitally same day if they do have a valid national ID card available. If they want to go beyond a certain limit, then there comes the advanced KYC. The proper registration or verification of their business, I believe a certain type of account upgrade is also involved. So all those arrangement happens, and then they become a full-fledged merchant. So there is a digital merchant, and then there is like the conventional merchant. So for the conventional merchant, they are eligible for more advanced products, maybe a POS machine, maybe a terminal, which is provided by the MSP. But for the digitally onboarded merchant, they can become an acceptance point in the same day using any of the MSP's apps. And in the MSP's apps, there may be a little bit of advancements in some of the apps. Some of the apps give them the functionality of sending a request to pay. The other ones just comply the bare minimum of providing them the QR code. So these are some types of differences. But it's very easy, relatively easier, for a smaller merchant to kickstart accepting digital payments in Pakistan. We basically made sure it using the regulations, and also technically in terms of RAST infrastructure, and also mandated the participants to embed that in the merchant apps.
Thank you so much. That way of doing a tiered merchant registry, I think it's a lesson others need to learn and see how to implement it in their jurisdictions. Jean-Jacques, Rwanda has progressed from account to account into merchant acceptance. That sequence planned P2P, then P2B, then B2B if possible, and distribution tactics most effectively are driving merchant density. What would you change if you were restarting eCash P2M today?
That's a difficult question. So, the sequencing of use case, basically, it's more of opportunity, right? The dominant use case or service that is used in our country is P2P. People sending money, peer-to-peer. And when we made the decisions of which to go for, that's what comes. So we started with it because we wanted volume to test the platform.
Okay.
Interesting. So the second one, we were like, because P2P was already existent, and from an innovation standpoint, the conversation with banks, financial institutions, before they understood what is instant payment, they were like, what's new are you guys bringing? Because people already sending money between institutions on a bilateral. As a consumer, he's already able to send. So second, the P2M, and that is where actually the opportunity is. And this is where a proper strategy is really needed, and this is why we work out. Because we need to look at payment beyond just moving money. Merchants want to be able to accept payment and get their money instantly in their account. The previous payment rails were delaying their settlement. Means when you look at all the card rails, merchants are usually settled on a T+1 or T+2 or T+3, depending on jurisdictions or the type of payment, offline, online, and all that, right? So instant payment is bringing instant settlement. Means as a merchant, if I'm out of stock, I'm able to go get a replenishment for my stock, and that's already a good value proposal. For banks, they're looking for argument to drive their customer acquisition strategy. They're looking for strategy to drive deposit mobilization. They're looking for strategy for customer retention. And we are in a market which is SME-led. And when you look at our region, you look at Kenya, Uganda, most of our market is really SME-led, retail payment-led. When you have a product that helps you to be able to pay and accept a payment, you build what we're now trying to motivate financial institutions is, I usually say, when you offer a payment just to execute a payment, the product is naked. Naked because what I'm looking for as a merchant is value-added services on top of it. So they need to be able to bring some additions, products on top of the merchant payment. As a merchant, if JJ is trying to complete a payment, can I complete that payment even if I don't have money? So our financial institutions can build on top that of that product, a lending product that gives me limits. As a merchant, bring close to payment a lending product that gives them ability to access stock facility, right? And this variety of products, which is what will drive, is what's driving actually the interest of banks, because instant payment is a very hard sale. When you're talking to financial institutions, you need to speak in the terms that will bring their attention to that. And for them, it's lending, it is customer acquisitions, it's customer retention, it is deposit. And that's what actually is now bring a conversation of merchant interoperability very interesting. And when you look at the onboarding strategy that we use during P2P, and the onboarding we are using on P2B is different, because now we are speaking about what interests financial institutions. Is everyone interested to that? No. Why? Because we have a monopolistic player, which is the mobile wallet, which has already built a merchant base or network, which interoperability, when it comes, somehow creates now a competition across the market. And the idea is, let that competition be there, and whoever is aggressive into their sales and distributions, onboarding, and value proposal around the merchant will create a new transaction behavior. I think that's really what we are working out on the merchant opportunity and selling it in terms of merchant interoperability. Yeah, thanks.
Yeah, thank you so much.
So wanted to add a point to what JJ just said. So we also observed this during our P2P days, that a lot of people were very conveniently using P2P as a mode of accepting payments, smaller merchants. They did have that easy to remember Rast ID. They would just display it on the shop or the counter. Anyone would come. If they don't have enough cash, they just pay on the shopkeeper's Rast ID phone number, right? It was very easy and convenient for both of the parties. And how we detected it, obviously, when you run Insight, you get to know it's not normal behavior that I would get 50 transactions daily in my account. So that's how we identified these particular personnel are receiving merchant payments or business-related payments into their person's account through the P2P rails. So why we don't think it's a problem? Because it's driving digitization. At the end of the day, it's payment, it's getting documented, it's facilitating both of the parties. It's also driving our strategy of reducing cash. We can never go cashless. We are trying to go towards a strategy of less cash. So yeah, that was it, and that is why we saw a lot of adoption. The numbers of P2P skyrocketed when the people got familiar and comfortable in doing those transactions free of cost through Rast. But yes, when we launched P2M, obviously we had to show the merchants and also the customers that there is a value addition. So I can always send money to JJ, but if I found some problem in the product or service he delivered, who would I go? It was a P2P transfer, right? So that is where the P2M comes. It's in the interest of the merchant if they become a regular merchant, get themselves registered with an MSP, that if, for example, some kind of fraud happens at the customer end as well, the merchant would have a recourse. Same is true for the customer. You do have an intermediary when you are doing a proper P2M payment, and that intermediary in our case is the MSP, Rast MSP, Merchant Services Provider. So, and also the credit part. That's very interesting point you shared. We haven't really much done anything on that, but yes, I believe in order to for merchant payments to really kick off, merchants also need to see this beyond payments. They need to see that their credit history being built for the smaller merchants. Their credit history being built may help them, getting maybe a line of credit from the MSP. May entitle them for government subsidies in the future. So yeah, that is a very good point, JJ. Thank you for bringing that up. I believe many of the switches, many of the implementation providers have basically integrated and built that transfer layer. for jurisdictions like us, now is the time to build incentives, maybe products, which don't really rely on the payments, but the results of those payments and those histories being created through those payments. Yeah.
Thank you so much.
Sorry, just one point to this. You know, payment, I usually say payment is a business of data. Because when you're already a centralized infrastructure, you're already consolidating the data of the entire ecosystem.
Yes.
And the biggest pain point you see financial institutions having here is how they score, how they aggregate their data to get eligibility criteria to give loans. So they point on bringing lending products on top of merchant payment. It also bring an opportunity because the entire regions, customers are used to standard lending products. It's a mortgage, it's a construction loan, it's a car loan. But when you bring such a product, you're actually bringing opportunity to financial institutions to get more visibility to my behavior as a customer. If they're able to mine that data, get to know where does JJ go for vacations? Where does JJ take his kids to play? Where do you usually get my coffee? And you even get to see maybe between the 20th and the 30th, I'm already expecting my salary to come, so you should be able to put a limit of a given amount of money that I'm able to complete a payment at a merchant. And at the central, with the open finance conversation coming, the merchant people, you are able to know this guy needs to replenish his stock. So it becomes a more interesting conversation than only moving money, because interoperability shouldn't be limited to only moving money and accepting payment. It should go beyond and become a data business. So, when you bring this to bank CEOs, the conversation becomes different. They feel like now there is an opportunity here and an add value, then it's turns to become a joint and ecosystem conversation than the switch trying to push for interoperability. I just wanted to add that. Thank you.
Let me follow up on that one. Do you have plans to avail to the banks and industry players on that data lake you have so that they can use those products effectively?
So the idea is we have a conversation with central bank.
Mm-hmm.
We are already working on an open finance.
Okay.
Because what we are trying to demystify is customers that have been used as a competitive advantage, each bank owning data and keeping it as their own data. Mm-hmm. So if I'm a customer of Bank A, the lending product that I can access is only based on the data that they have. Yet, most of my transactions are usually done on a wallet.
Okay.
If they consider only A, means whatever happening on the wallet will not be considered, which reduce my eligibility criteria as a merchant, right?
Yeah.
So what we're trying to do is, how do we overtake that power that institutions has over customer data? Because at the end of the time, it is me as a citizen, me as a merchant, that can give consent to my data. So that if someone is trying to access a facility as a merchant to empower his ability to access a merchant loan, they don't look at only how much a transaction they have received on a single account. Instead, give them visibility to all the payments that are coming across the entire network, because most of us here, you'll notice, you have 4 or 5 accounts, and all of them you're using them. Worse even for the merchant. So it requires, of course, a lot of structural changes, which our regulator is looking at with the initiative that we have of the open finance, because open finance is, you can access loan from any institutions, which means now the interoperability is taking another step, because with the digital payment evolving every day, the need become different. Yeah.
Yeah, let's talk about control. Hina, what real-time controls and standards redress flaws are enforcing for P2M in Rust without overburdening tiny transactions from micro and women-led SMEs?
So I believe we talked about it in the morning as well. We do have pre-validation available. So when you scan a merchant's QR code, it basically does a title fetch. So at least you get to know the QR there at the merchant's end is not been tampered with. Someone didn't put another sticker on top of that. So when you scan, at least you get to know you're paying to the right person. So that's the first step from at least the push payments perspective.
Okay.
There are velocity checks at the technical level. So if there's an unusual traffic from a particular participant of an unusual nature, we do have the capability of marking those particular transaction and actions as suspected actions, and we make that available to the participant. So now here it becomes a little bit tricky because we don't stop those transactions. However, we flag them and make it the participants' responsibility to take appropriate actions based on the customer profile. Because as JJ also mentioned, obviously we may not have a very clear view of what is the behavior of that particular payer or payee for that matter. So that responsibility is on the participant, but at the center, we take care of the technical validations. We ensure that there are pre-transaction, mechanisms for the payer to make an informative decision whether I want to pay to that guy or not. Similar in case of the RTP, the request to pay message has been, so it's the standard ISO 222 message, PAN 013, but we have mandated the merchant service providers to put certain fields, put information in those certain fields, and we have also mandated the customer and participants to display those information to the customer, so that I know that, okay, I received a request to pay from my utility company, it's for this amount, it's valid till this, and this and that and everything, and then I take an informed decision whether to accept that RTP or not. For the dynamic QR codes as well, we store each of the dynamic QR codes centrally as well, so to ensure an invoice is paid only once. It's not paid after a particular expiry, because in Pakistan there are very varying use cases. An invoice becomes, for example, 1% more in terms of penalty after a particular date, and then it becomes non-payable after a certain date. So if we wouldn't have those controls at the center, there would become a lot of reconciliation issues for such bill payments, and they may be of higher amounts as well. And if these instances happen, it basically, the trust of the customer takes a very big fall. Yeah. Because there's a statement which we like to quote a lot in Pakistan. We're not only building a digital payments platform, we are also building digital trust in Pakistan. So the transaction which you do at the bank counter is as trustworthy as the transaction you're doing through Rust. Yeah. In the morning, I believe I displayed a slide. It mentioned that 88% payments by volume are basically digitized, and 12% by volume are OTC transfers over the branches. If you take it in terms of value, it's almost reversible. Even the OTC value is higher than the digital value. Why? Because there's still a little bit of a lack of trust, I should say, or suspicion, I should say. If I'm doing a 10,000 PKR payment, I just do it instantly from my app. If I'm doing let's say 1 million or 10 million, a PKR payment of by making a major purchase, a house or something, so I would hesitate a little, and I would write a check, make a pay order, do an OTC. That kind of a behavior is very prevalent in our industry. So we try that we keep a balance in terms of innovation and trust, because one or two certain instances coming on Twitter and social media anywhere, we take a huge hit in terms of the trust we build in the community on the merchant payments through Rust.
Correct. Thank you so much. JJ, I'm asking you about cross-border readiness. Which design decision in Rwanda in instant rails future-proof merchant payments for regional cross-border use cases do you have so that a SME can accept locally today and sell regionally tomorrow with predictable risk and fees?
Yeah, thanks Olivier for that. So on the merchant, we decided to go phased approach, right? I usually say when you get something right domestically, expanding cross-border will be easy. So on the merchant domestically, what we did, our market is still have a lot of USSD. We are expanding a lot of smartphones coming in place. So for that, to cater for that, we've decided to implement also the QR. And the standard that we've decided to go for is the EMVCO standard, which actually, because we decided that because it's already a standard that is globally accepted, secured, and convenient for the merchant, convenience to the consumer. And for cross-border, and this is the conversation we are having, because when you look at our region already, there are a lot of inter-country happening. We've already have an economic integration among our countries, a lot of people doing intra-trades, and we have a conversation now with the switches, TIPS, PesaLink. How do we have an EAC cross-border? And the conversation is, should we go for a centralized switch, or we start bilateral switch-to-switch integrations and have a proof of concept ready, right? And for that to happen, what we're doing is we are using the already existing instant payment system, create an endpoint that will segregate domestic from cross-border transactions, use a middleware or use the connector that we have to facilitate our integration with TIPS. That will be like a POC. Then if that is proven and volume is demonstrated, we are able to say with this volume, I think we need to go the next step. And we are already dreaming of the next 50 project that is happening in APAS, Singapore, and Malaysia, which is an amazing model to look at. And this is something that we are dreaming of. But again, for now, if we get a regional interoperability achieved, I'm already talking to the JDIDA on a COMESA. What do we do? Because the idea is, if most of these switches are already connected, you have COMESA that, if all goes well, should consolidate 21 countries. In the EAC, we're speaking about 7 countries. So it means you already have them consolidated at some point, at a central point. Interconnecting them will create a more consolidated cross-border rails. And definitely the idea is we leverage on the existing and create standard on top of it cross-border so that we don't reinvent the wheel, because the instant payment that is in place is cross-border ready. We just need to add an engine that will enable it to happen.
Thank you so much.
Maybe something just to that. That also we are looking at it on a phase approach to say, because that leg will miss one thing. And what it will be missing is the FX part, which will be handled through the settlement partners. But when the engine, and which is already into the Mojalu platform, version 17, if I'm not mistaken, the idea is, how do we leverage on that engine that is there? So that, because the idea is, when someone is sending money, should be able to know, if I'm sending from Rwanda, how much will be the beneficiary receiving, if it's 100 Rwandan francs, how much shillings you'll receive. And that converter should be there to improve the value proposal that we're trying to give to the citizens from a cross-border perspective. I just wanted to give that specific. And that's a second phase that we are looking for by next year. Thank you.
Yeah. Okay.
Yeah, just wanted to add a point. I believe, JJ, so it was a very smart choice to use the EMV Core standard. We are also using the same, just sharing with the participants here that it basically enables, it basically very easily allows you to have QR codes having multiple scheme information. So for smaller merchants, it may not be a big deal because they may be only using the local payment rails. A smaller digitally onboarded merchant may only have RAST as a scheme in their QR code. But for already existing larger merchants, if you want to tap that market as well, which already have POS, but you want to have a QR code as an additional acceptance medium in case the connectivity goes out or something like that. So for that EMV Go QR standard, it's pretty handy. You can embed Visa information if that merchant has been onboarded by Visa, MasterCard, or any of the international payment schemes. That information could also be very cleanly embedded into the same QR code. There won't be the problem of having multiple QR codes and customer having to decide which one to scan and pay. It would just be one. You scan it, and then after scanning, you decide which medium you want to use to pay the merchant. That's just, I wanted to add smart choice, by the way.
Can you tell us about the cross-border in your ecosystem? Do you have already some merchant payment features for cross-border?
Unfortunately, as of now, we do not have any cross-border merchant payments.
Any plan?
Yes. So we are planning to integrate with Buna.
Okay.
I believe it was also covered in Faisal's session in the morning. We are very actively engaged there. The first stage is to enable the fund transfers, the remittances, the inward remittances. And then the second phase is the remittee being able to pay bills or make purchases on behalf of their family, from the cross-border, sitting cross-border. So that is something in the pipeline. But as of now, on the IPS rails specifically, a lot of cross-border is not happening. It's all in very implementation and design phase, and it's one of the reasons we are here, and we're trying to leverage on the knowledge of all of the community to guide us better that how we should go about it, what challenges to look for, and how to create safer paths for the customers.
Thank you. We are watching how Buna is being implemented closely. We learn more on how you implement it, and probably later will be sharing with us how it went.
Yeah.
Now, let me open for the audience to ask some questions, if there are. Okay, I have two questions, one from Leonard and another one from Michael.
All right, thank you. I just want to ask, is it John Jack from RSwitch? Yes. Do you onboard merchants directly on the RSwitch platform?
No. So, am I audible? Yes. So, we decided to split responsibility. The liability, the onboarding of the merchants remain with the acquirers. What we did is we centralized only the data. Whoever is registered, of course, is recorded in the centralized database, the lookup, we call it lookup, to facilitate, of course, merchant validation at the point of payment. But it is the merchant to recruit, it is the merchant to register. All the onboarding KYCs remain with the acquirer, I meant.
Thanks very much. I wanted to ask about a thing that seems to me to be the elephant in the room when we talk about merchant payments. Now, when we think in the Western economies about merchant payments, we say the point of comparison is card payments. And the argument is simple there. I think Hina already mentioned it. If I pay a merchant in the UK with my card, then the merchant waits 2 to 3 days for their money. They pay a significant fee in order to get it. In an instant payment system, that's not the case. They get the funds immediately, and there is a small fee to pay. Now, the problem is that in a lot of cases in emerging markets, the point of comparison is not card payments, because people don't have credit cards. They don't have debit cards much either. The point of comparison is cash. And the question that we need to answer, I think, is what would persuade a merchant that it's better to have an instant payment than a cash payment? And that's the question that I don't think I hear asked very often.
I didn't hear the last part. What's the question?
What would persuade a merchant? What's the business case for a merchant to say, I prefer to have my customer pay via an instant payment system to having them pay in cash?
So, that are very good questions. The value proposal here, one is instant payment give merchant instant settlement. Whenever a customer pay, money is available to your account instantly, which means most of these merchants are small. They replenish their stock like 3 times a day. And when you're accepting payment on a card rails, you wait for the second day, which exposes them to go get money from their friends at a high rate. That's one. Second, with a proper, of course, education, because that's another topic for another day, which will require also awareness and educations. But you need to break that value proposal also on the institutions for them to onboard those merchants. Because the challenge of financial institutions today is managing physical cash is very expensive. In yesterday's director of payment from Central Bank, when he was populating the percentage of how much saving they made because of digitizations, because of physical cash movement liquidity, banks usually goes to get more liquidity from Central Bank using CITs and all that. People withdrawing money from the ATM. So the idea is you are creating opportunity to these financial institutions to lock money in the digital ecosystem. When money stays in the digital ecosystem, you're increasing capacity of this financial institution to lend more. And this is something that we need to emphasize because it's an opportunity for them. But again, create even more better visibility to the behavior. Because the behavior of a customer, if it's not seen, you're actually offering him a wrong lending product. So this is also an opportunity to financial institutions for a proper diversification in terms of lending to the merchant, in terms of lending to the consumer, because with this actually it's a great opportunity for fintechs that want to venture into the BNPL, buy now, pay later, because it has been failing because of lack of data, lack of visibility. With that, financing partners or financing bank can gain even more confidence. It appears to be a good story. However, one thing needs to be done. It requires a lot of awareness. It requires a lot of educations. And for bank to accept to offer this at a zero merchant commissions. Because we have a market that is so sensitive to the pricing, to the extent that even a 0.1% merchant will opt for physical cash. And that's also a challenge because of that commission and require their investment to see an opportunity and waive it.
Yeah.
Just
you.
to add one more thing,
Yes,
that was
yes.
very inclusive. From the value proposition from the customer and the merchant, I'll talk about the very small merchant. So even if the transaction in cash doesn't have an MBD, by the way, in Pakistan on digital currently the MDR is also 0. But even if there's an MDR and the cash is free, the handling of cash does have a cost, specifically in the jurisdictions like ours, and maybe many of the members here would agree. So there is theft involved, there may be fake currency involved, right? There are other losses, right, when handling the cash and dealing with the cash. So if a merchant thinks holistically, if they are introduced and pitched in a correct manner, highlighting all of those issues, then I believe they did accept it. We have seen merchants who have been doing cash transactions from generations in very small markets. They have digitized, right? And the other thing from a consumer perspective, when I go to market, I don't really carry a lot of cash. Generally, we don't. We have card. But if we, we happen to like something and it is a bit costly, we would really ask the merchant to, can I transfer you? I don't have cash. The ATM is far away. So if they do have an account, they wouldn't lose that sale. They'd just, tell me their Rasta ID, give me their QR code, I scan, I'd pay. I'd be happy. He'd be happy. He made a sale. I didn't have to walk to the ATM or didn't get the chance to buy, which I wanted to. So I believe, yes, there is a value proposition when we're competing against cash. It just needs to be marketed or, explained to both sides in a friendly way, in simpler words. That's my take on that, yeah.
My worry, I've heard the cost of cash argument a lot. My worry is that typically the cost of cash is not borne by the merchant. It's borne by the banks, it's borne by the government.
Yeah.
And therefore, it seems to be the only way in which you will see change in that area is if the banks and the government start charging the merchants the cost of cash. Then they change their mind pretty quickly.
Yes.
Thank you, Michael. I think we've run out of time. I learned that we should use more data to enhance the payment proposal to both merchants and DFSPs. And to answer Michael's question, the transaction would be used to give them more facilities, actually, according to what we discussed here. Thank you, everyone, for a good session. Let's take a pause for the next one. Thank you.